Hello, everyone, and welcome to this webinar where we will be looking at the US stock market, stock trading and investing using VPA and some of our quantum trading indicators. Thank you so much for taking the time out in your day to come and join us. That's me, Anna, and my husband, David. I know most of you know who we are. But before we start, can I just draw your attention to the disclaimer that you can see on your screen? As you know, trading and investing can be very risky. So please don't ever think of using money that you cannot afford to lose. I do also know that we have had quite a lot of new sign-ups to these sessions, and literally it's just 2 slides. So very quickly, the volume VPA, it's all outlined in this book, which is the Complete Guide to Volume Price Analysis, which you can find at Amazon's. I think this is a very old slide because we say we've only got 280 5-star reviews, but I think it's how many is it now, David? Is it?
It's a lot more than that.
I think it's a lot more than that. And it's essentially the relationship between volume and the price action that you can see on the chart. And what it does, it highlights the anomalies. In other words, when the two are not in sync. It's not so the price, so the move that you see on the chart isn't a genuine, a trap move, and that's what it signals, if you like. And what we're going to do is we're going to show you some examples of VPA anomalies and VPA and how it's represented on some charts that we have for you today. It's also available as part of a box set, because one of the things that we found that people said, okay, well, the book explains the concept of volume price analysis, but what about some actual examples? And so we came up with a companion, if you like, of worked examples. And there are hundreds of examples in the book that goes with it. And on Amazon, you can actually buy it as a box set, but a box set on Kindle. And this is the last little slide that I have. It's pretty much self-explanatory. What VPA does, it lays the foundation for your chart analysis, for your trading methodology. And it's made up of 5 principles, 5 concepts. Volume is one, the price action is another. Then we have the candles and we have candle patterns, but we also have support and resistance. And I really can't stress that too much. And we will see that on the charts, and you can measure, you can draw that support and resistance in all sorts of different ways. You can use moving averages, you can use Fibonacci, you can just do straightforward lines. But they are those areas of the chart, those zones on the chart where the price is likely to reverse or pause and go into congestion. Because what VPA also does, it helps us to give the chart, it frames a narrative on the chart in the sense that, is it in a trend? Are we in a primary trend? Are we now looking at a pullback? Are we looking to move into a congestion? Are we now going to be looking at breaking out of that congestion? And that's what VPA does. It gives you these foundational principles, and then what you can build on top is your own approach, your own tactics, your own strategies, and you develop those tactics using a combination of tools, specialist tools, what I call standard tools that you have on your platform, and we've listed some of them here. As I said, moving averages, Fibonacci, MACD, etc., etc. Or you have proprietary ones. We have our own proprietary ones. Some of you who are with us here today will already be users of our quantum trading indicators, and our ones are, if you like, we've developed them to support the foundational methodology, but that does not take away from the benefits that you can gain from using, say, things like Bollinger Bands. And in fact, I have a Bollinger Band on one of the charts that I'm going to show you today. Now, overarching all that is time. What we mean by that is not just the time of the chart that you are looking to trade, but multiple time frames. And again, I've got a really nice example of that on the SPY to show you, because that's the theory, but as always, it's much, much better if you see it in on the chart and explained to you. And the other thing about the beauty of volume price analysis, that the signals that the methodology throws up, if you like, they just repeat all the time. Once you recognize a particular signal, a particular anomaly, you will see it again, and you will see it again in different time frames. And once you begin to recognize those anomalies and those signals, you then become much more confident in your chart analysis. And with that confidence, then you can then move away from the kind of emotions that trading can trigger, the emotions of fear of a loss, fear of missing out, FOMO, and just relax more. And once you're relaxed, you can look at a chart and think, yeah, okay, that's interesting, but I know what's going on. And again, I want to talk a little bit about that, particularly with reference to Nvidia, where there's been some very interesting price action following the earnings report, and also some reports that are coming out in the media that there's some quite moody insider dealings going on. So that's what I'm going to do. And I'm going to pass over to David. He's also got his charts, and those of you who were with us last week, he introduced some new indicators that will be launched alongside the stock trading and investing program, which is going to be towards the end of September. You'll actually see them in action today, and they are absolutely, we think, absolutely brilliant. Again, all based on volume to help us identify those signals, just to help us to, if you like, speed up the decision making that we have to do when we are looking to trade and invest as well. Right, where I'm going to start today, I'm not going to go straight away to the SPY, the Q, and as I said, Nvidia as well. What I actually want to start with is volatility. There isn't any, which is always a very dangerous condition, a market state for the market to be in. It's a very dangerous state for the market to be in. One of the things we talk about in both the Forex program and very much so in the stock trading program is we describe the markets in terms of C states. And complacency is probably one of the most dangerous, because the market is complacent. The market is ticking higher. The market doesn't want to fall. There is volume going in. It's not spectacular volume, but then it's August. It's also the end of the month. Historically, we're moving into September. September is usually can be a very bad month for stocks. Some of the major crashes have happened in September. I know everyone goes on about October, but I think statistically there have been some very serious corrections in September. So you've got a seasonality factor. It's been the summer. Despite all that, the markets have held up remarkably well. Those of you who follow me on Twitter will know I've been saying this for months and months and months. The market does not want to fall yet. And by fall, I do mean a very serious correction. Now, one of the ways you can judge what the market state is, what the market's mood is to look at the volatility indices. Now, normally we look at the VIX, as we have here, and this is what I said. I've got a Bollinger Band on here. This is from the CBOE, and you'll notice there isn't any volume here because this is just a futures contract from the CBOE. So what I thought I'd do is that Bollinger Bands are great for showing us those periods when a market is in congestion and it's going to be looking to break out. Now, clearly the VIX is not in congestion. It is falling. And what you have to remember about volatility is that it is mean reverting. So it's like an elastic band. You pull it and pull it and pull it, and then it'll snap back to what its mean is. And for the VIX, would you say, David, it's about 20, 25, something like that? There's no precise number because the number, will vary. But generally speaking, once it starts to go down to these levels, down to very close to single figures, markets are very complacent. Now, you could say they're very greedy. Well, fine. I prefer complacency because the markets are climbing, but they're not roaring up. That would be greed, but they're not falling either. So, and the danger signal is it's 13 at the moment, 13.68. It looks like it's in a very a sharp downtrend. I would say max complacency is really when it gets certainly down to the tens and down to the single figures. And it has certainly been down there. And one way for you to check this out for yourself is just put a chart up, say a weekly chart for the VIX. And I'll do that now for you. And you can see, it looks awful. I'll just pull it down a little bit. And you can see the enormous spikes, and you say, well, when was that? Well, that was March 2020. That was the time of the big fall in the time of the pandemic, because it correlates negatively with the S&P 500. This is actually based on the option pricing in the S&P 500. Looking at it on a weekly, what we've also got is you've got support and resistance levels, and this is what I mean here by looking at the tens and going back into single figures, and you can go way back on the chart and look back and see, well, what was happening at the S&P at that particular time, and you will see that the S&P will be at one end of the top of the chart, and the VIX will be down at the bottom. What you also have to remember is that markets can stay in this state, which is, if you like, oversold, if you like, for a lot longer than you and I can stay solvent. So even if you see this, the VIX coming down to these levels, and you think, oh my goodness, it's time for a short, you do have to be patient because, as I said, it can stay down here for a while. Do we know when it's going to reverse? What's going to trigger the reversal, which will also trigger the reversal in equities, which is about risk and money flow? Is it going to be a piece of fundamental news? Is it going to be something on the geopolitical stage? Today we had the PCE, and we had some employment data, and tomorrow we have the NFP. Two areas highlighted by Jay Powell at Jackson Hole earlier on this month. So the market's been keeping a very close eye at these numbers, and tomorrow we have the NFP, and we can look at the kind of figures that are expected to come out. What the Fed want is they don't want a strong labour market, and they want the inflation rate obviously to come down, and one of their favorite metrics is the PCE, which is the consumption rate. It's consumers, how much they're spending, and is that coming down? And they have these levels. If that comes in bad, in inverted commas, is that going to be good for interest rates? Only to the extent that it will give the Fed maybe some pause for thought. So that's the kind of background that we are in at the moment. Now, you could also say, well, the market is kind of half ignoring what what Jay Powell may say, and despite interest rates going up, the market seems to kind of shrug it off. And it's been driven primarily by 7 to 10 stocks. So that's one volatility chart that you might consider. The other volatility chart is the VVIX. Now, I'm not going to go into a long explanation of what the VVIX is, but it's the VIX of the VIX. And here you get a very different value, and that's gone up very, very slightly. The kind of number is when it's below 100, I would say below 80 here. It's looking at volatility over the futures over different maturities. So it's as I said, it's the volatility of the VIX itself, but over not just the 30-day. The VIX is the 30-day, but you have the 9-day, you've got a 1-day, you've got a 3-month, and you've got a 6-month VIX. So that's what it does, and it looks at the options market. But generally speaking, this is the hour. Fine, we've had a little pullback on the hour, but if we go on the daily, you will see that here too, this has been falling as well. Excuse me. I've never really got to grips with TradingView in terms of not having to constantly adjust the sizes of the charts. But maybe I'll try and discover how I can swap time frames without constantly having to readjust them. But I've not come across that yet. As you can see, it's been in a downtrend. Yeah, we've had a little bit of a kick higher, possibly because the markets have kind of paused slightly. But generally speaking, it's also there's no volatility. That's what it's telling us at the moment. And lastly, the other volatility, if you like, chart that you can have a look at. This is interesting. This is an ETF, and this is a twice long VIX, which basically pays out when the VIX is going higher. And I think I'm going to put it on the hour because the daily chart is so difficult. Here we are. Have a look. It takes me a little while. And this has absolutely cratered. Absolutely cratered. We do cover volatility in great detail in the stock program, and we look at ETFs that will allow you to invest or use them as some kind of hedging. But this is leverage. This is twice, so you lose twice as much and twice as fast, David. Yes, basically. Which is basically it. And you really, really do need to know what you're doing, and our advice is to stay away. Treat them like an unexploded bomb, quite frankly. But what it's very useful for is to give us an insight into the volatility landscape that we are in at the moment, against which the markets may or may not be moving, and a point where possibly they are going to reverse, because this will move at lightning speed. As soon as volatility hits the market, this will reverse very, very dramatically. So that's a sort of primer on volatility and what you can look at in the market. They're all freely available. I've got them on TradingView. If you haven't got them on TradingView, you can find them at investing.com. I'm actually going to stop there, and I'm going to pass over to you, David, very quickly, and then come back just to give you a break from my voice. What I want to have a look at a little bit more closely is the SPY, which has done absolutely nothing. You can see that, this tiny little slither that we have here today. The volume so far hasn't really completed. For the ETF, we do have to wait until the close, so it can be very, very deceptive. But this is what I was trying to explain to you with the volatility. Basically, there being none, markets are still climbing higher, not at a huge rate, and markets can go up on low volume. And my own feeling is, and David's as well, is what the SPY and the Qs are looking to do is they really, really want to test, at least get back to this all-time high. What's going to stop them? Well, the usual barriers of support, resistance levels, how strong they are, and you will see them in the faster time frames. But on a day like today, when you have this really, as I said, this slither of price action, it's not easy. And it's a day for patience, but there is a reason. It's the end of month. We have NFP, and of course on Monday we have Labour Day. And the only thing I would say, come the end of this week, come tomorrow, come the end of this week, is markets generally like to end on a nice positive note going into a public holiday, whether that be the Christmas time, whether it be Thanksgiving, Labour Day, any excuse will do. Come back Tuesday rather. Let's see what happens. We'll have a whole load of people back in offices, back from their holidays in the Hamptons or wherever else they go, and we'll see what September brings. But that's where we are today. There has been some price action going on the SPY, despite all that, and a couple of really nice VPA signals. But just let me pass you over to David, and then we'll come back to have a look at this more closely.
Excellent. Anna can see my screen, so I hope you can too, and I hope you can hear me okay, loud and clear, on our wonderful new microphones, which are a lot better than we do have headsets on still, but we're not actually connected to them directly. We have audio, we have studio type mics on stands, all the rest of it, so it cuts out all the ticking that we were getting on previous recordings. So hopefully the sound is a lot clearer. I've got a few things to show you, starting on the NinjaTrader platform. We've got dear old Tesla here, and on the various timeframes we go 135 across the top. And the reason that it's split in this way, because the charts at the bottom mirror the same timeframes, 1, 3, and 5 minute. The charts below are purely based on volume price analysis, got no indicators on there, just got volume. And the top level has our new volume relative strength indicator, the VRSI, which I introduced last week. So if you didn't come along to that, let me give you a quick thumbnail. Probably easier if I click on the 5 minute just to show you what's going on. Even with Tesla, it's been pretty much sideways-ish price action. There have been trends to take advantage of as an intraday trader, and no doubt on the options as well. But certainly from a more considered and well-developed trend, it's been a bit lacking even here. The indicator is, as I say, it's called the volume relative strength indicator, and it is about relative volume. So it's a volume-based indicator, and in a way, it peels back the layers of volume price analysis to look inside in the context of the relative nature of volume, and to convert that into pressure. And by that I mean the pressure that is developed in a trend, because when a trend is underway, we want to see that trend move with momentum to really develop some strength. And what this indicator delivers in a very illuminating way, in a very clear way, is the pressure that is being applied and developed, and therefore whether that trend is going to continue, or whether it is a weak trend, or whether it's a trend that's running out of momentum and now reversing. And that is all revealed in this very graphical, colorful way. It has three key elements, if you like. The first element is the fulcrum line here, which is fairly self-explanatory, where we see the sentiment in, and we're in a stock here, but it can be an ETF, an index, commodities. It really doesn't matter what it is. The sentiment here moves from one side to the other, so we move from bullish to bearish or bearish to bullish. So the central fulcrum point is important. The second aspect that's important are the color changes. And where we have these darker colors here, then that is signifying strength. And where they change to lighter colors, that is signifying a diminishing of that strength. So where we see a bullish rally here, for example, then we're in a darker color. And then as that sentiment wanes, we move across and we transition into the lighter color. So that's on the bullish side, and exactly the same on the bearish side. So we've got dark colors or a dark orange for bearish strength, and then as that weakens, we move to a lighter color. So it's very simple to instantly look at a chart and see where we are in terms of the pressure. The third element is really what defines that pressure, and it's in the context of the height of this pressure bar. The taller these bars, then the greater is the pressure being applied to any particular trend. And in a way, the beauty of analysis of this indicator is very similar in the way we analyze volume in the traditional sense in volume price analysis. Because in VPA, what we're looking at is we're looking at trends such as this, and we're looking at rising volume. Well, in the same way here, we're looking at rising pressure. So the analysis is very similar in that way, and it's also similar in another way, not only in terms of the height of those bars, these pressure bars, which could be equated to volume if you like, but also in the context of whether they are rising generally or falling. And in addition, where we look at them in the context of benchmarking. So where we are looking at a session, for example, where we're comparing one volume bar with another, we can also do the same with pressure bars. So for example, here, where we look at this pressure bar, yes, we had some bearish sentiment coming into the market for sure at that point. Bear in mind, we're on a 5-minute chart, so this is a fast time frame. So we had some pressure coming in. But when we compare that, the pressure with that candle, with the pressure being associated over here, clearly it is a lot less. As with VPA, we have to compare like with like, so we always have to make sure we are in the same session where we are comparing our pressure bars. And this is the beauty of the indicator, because it overlaps in so many ways with our own volume price analysis methodology, which is why we always use it with that. And that's why I've set up this workspace in this way, to really reinforce that point, that we have the VRSI above and we have a straightforward volume price analysis chart below, so that we can read volume in association with what we're seeing on our VRSI. So it's using the two as a blend, if you like. What the height of the pressure bars also tells you very clearly is the strength of that trend and the angle at which it falls or rises. And you can see that demonstrated here. These are quite tall, and they're quite tall because the trend is rising quite quickly. But as soon as that trend goes into a congestion phase, they fall away, we transition into a lighter color, we get punctuated with little bits of bullish momentum in here. But generally speaking, the height of those pressure bars is much lower than it is average-wise over here. And again, you will see this everywhere where we have, and we've got exactly the same scenario playing out here at the live edge of the market. It is a trend. Let's just move the chat box down. We've gone from, where are we, 257 to 259, 30, 31. So we've gone $2.50. That $2.50, bear in mind this is Tesla, so it's a decent move, and it's taken maybe an hour, maybe more than that. So the angle of the trend is rising. It is a bullish trend, but it's a very gentle trend. It doesn't have that momentum behind it, which you see over here, for example, where we have very strong rising bars, very tall. Clearly, this is associated with volatility, but a similar sort of scenario here. Whereas over on this side, what this immediately tells us is from the height of the bars that yes, we have a trend. Yes, we're holding above the fulcrum point. We had a very marginal move there, but it transferred back to bullish again very quickly in the next bar and into a darker color. So yes, we have some bullish momentum here, but it's really not developing the strength, the pressure in the move that we want to see. So yes, it's tradable. Of course, it's tradable. The indicator is helping us to stay in. And that's another key facet of the indicator, which is unwritten, if you like, but it's very similar in the way we developed the trend monitor and the trends, in particular the trend monitor, which takes a more considered view of trends and is attempting to keep you in that trend to stop you getting emotionally triggered out of a trade when you get these reversals and pullbacks, because they are the most damaging. When you have a trend underway, maybe you've got into this trend somewhere down here, perhaps you've got through here, then you start to see the market reverse. Your immediate emotional response to that is to take your money off the table. Now, if you understand VPA methodology, you will recognize that as a secondary trend. And provided we saw volume falling with that, so we've got a falling market with falling volume, in other words, it's a secondary and it's not a reversal of primary to primary from bullish to bearish. It's simply a secondary pullback interpreted for VPA. What this is doing is this is also confirming that, because it's really not telling us to worry about this for the time being. We're not seeing any significant pressure to the downside. Yes, there is a bit of a pause. Yes, there are a couple of red bars there, but it's really not converting to anything. So don't panic. And that's really the message that the indicator also delivers, more subtly perhaps, but that's the underpinning of the indicator and the other reason that we developed it, and the reason that we say use it in conjunction with VPA, because the two are very much blended together. They are very much volume based. They are very much joined at the hip, if you like. And that, in a very quick way, is an overview of the indicator. As I say, you can use it on any chart you like, any instrument, any time frame. We can go out to the weeklies, the monthlies, and so on and so forth. I just happen to have it here just for ease to show you very quickly it actually in the live markets on Tesla, which is usually moving a little bit more quickly than it is at the moment, but nevertheless, it is moving more so than some markets. So that's the VRSI. The second indicator I've got set up below that is the VWAP. Again, I'm sure many of you appreciate the importance of the VWAP, so I'm not going to go into it other than to say that here we are. I've got it on 6 time frames here, again, using it in multiple time frames. The reason we developed it, as I say, is because it's a key indicator for stock traders, for stock investors. And in the videos that I've recorded with this, I've also explained how to use the indicator. A lot of stock traders, certainly day traders, tend to look at it in a very simplistic way, where the price action crosses the VWAP, which is this center line, and the 2 outer envelopes here, which are included in the indicator. And I'll show you the 5 variants that come with it, because this is a 5-set indicator. This is not just one indicator. This is not just simply the VWAP. This is quantum trading we're talking about here. We don't just do one indicator. There are 5 variants included in this one indicator. The one that I have selected at the moment is the VWAP. The reason I know that is because over on the left-hand side here, the way the volume weighted average price indicator works is it resets at every new session. So when the session starts, and this started in the pre-market at 1 o'clock, it resets automatically and starts the calculation from 0. And you'll see when I show you the variance, there's a moving weighted average which overcomes that. Not overcomes it, but it gives you an option if you prefer to see that condition not arise. We use the moving variant. But just for the time being, just to explain the basics of it, the VWAP is the central line, and we have a single standard deviation to our upper and outer envelopes, top and bottom. Many day traders use the VWAP as a signal to go from short to long, or long to short, buy or sell or buy. And I'm afraid the reason they do that is because they are not volume traders. They don't understand what is going on down here. And the places to buy are when we're up well beyond the envelope, because that is the point at potentially where the stock or whatever it is you're looking at is likely to reverse. And equally, we're looking for opportunities well below that to the downside to take opportunities of uptrend when we get things like this, where we see strong 2-bar reversals. The envelopes provide support and resistance, as you'll see across all the time frames. It's uncanny how they work. Let's just pop this one open. This is the 15-minute. Pop that up full size for you. There we go. And again, you can see the resetting here. You can see how the price action clings to the outer envelope, almost acting as support there. Then we get the reversal. Then we get the opposite of that. We find it finding support down at the bottom here of the outer envelope, and back it goes, tracking all the way back through the VWAP itself and up to the upper envelope. Now, many traders, day traders, will be getting in here as we cross. Us as volume traders, we will be down here somewhere looking to take advantage of the whole of this trend and not just miss out on all this chunk simply because we're getting in at the crossing of the VWAP. Some traders may disagree with that, but that's the way we use it and the way we've used it ourselves for some considerable time. Now, in terms of the other variants I talked around, if I just click on this and we go into the indicators themselves, as you can see, here we are. Let's go down onto the VWAP. There are 5 variants of the VWAP. The VWAP is the volume weighted average price. That is what it stands for. So again, it's another strongly volume weighted indicator, which is why we've embraced it in the program and we've used it ourselves for many years, but we've also incorporated it here in terms of an indicator. The second variant is the MVWAP, which is the moving volume weighted average price. The difference with that is that it no longer anchors, it no longer starts at each new session, it just continues seamlessly. So if you want to see the VWAP continue through the sessions without any break, that is the one that's very popular. And I have to say, I like using it particularly because when you go through the start of a session, the VWAP at the start there is very tight to the price action, and it's quite difficult at times to see where we are in the context of the upper and lower envelopes. What the MVWAP gives you is it does away with that because it's a seamless transition from one session to another, and it just carries on. The algorithm just carries on throughout the session. It doesn't take note of the session, so you don't have that really compression of the VWAP at those session crossover points. So it really makes it smooth. The third one, the AVWAP, stands for anchored VWAP. And I'll show you all these in another session in more detail. But the anchored VWAP allows you to select your own points. It's rather like Fibonacci, where you choose significant levels on the chart, maybe a big turning point to the upside, maybe a piece of fundamental news on the stock, maybe a big technical change, whatever it is. You choose those peaks and troughs where you wish to anchor your VWAP to start the calculation from. It's fantastic. It's so easy. You literally just click it on the chart, select your point, click it on the chart, and off you go. And it does it instantly for you. So that's another variant. Again, very, very popular with traders to give you complete control over where you wish to start the algorithm from. The significant points, we will say significant points you're looking for are those significant highs, those significant lows in the time frame you're looking at. It might be a 5-minute chart or it might be a daily chart, doesn't matter. We then have the TWAP, which is the time-weighted average price. This does not incorporate volume. This is purely at looking at averaging time over your particular chart of interest. And finally, we have the intraday VWAP. And what the intraday VWAP does is it works on the much slower time frames of the dailies, the weeklies, and the monthlies, because the others do not. So you have a full suite of tools to cover everything from intraday scalping, very fast, right the way down to the much slower time frames where you're looking at it from an investing perspective on the dailies, the weeklies, and the monthlies. So that's the VWAP. And if you have the NinjaTrader full package, and I can see we've got 1 or 2 of our customers in the room who I know do have that indeed, therefore they will be getting all these indicators free of charge, because it's one of the things we've done ever since we launched the company 11, 12 years ago, whenever it was. If you invest with us in a full package of indicators, whatever platform it is, it doesn't matter. When we develop new indicators for that platform, you get them free of charge. And those customers who joined us right way back at the beginning and put their faith in us, they've benefited. They've had 7, 6, 7, 8, 9 indicators. I've lost count, and all the variants that go along with it. Can I also say one of the other things we've also done, I haven't got it running at the moment, is that we have now incorporated all the indicators across into Market Analyzer. So you can embed them there. You can see what's going on instantly across charts, across markets, multiple timeframes, whatever. And again, that would be included if you have the full package. So if you've not got the full package, it's a great time to upgrade. If you've bought from us in the past, we give you a full credit. So if you bought anything from us in the past and you want to upgrade to a full package, we give you a full credit, and you can upgrade and use that credit to reduce the cost of getting to the full package price. They are heavily discounted anyway, and another benefit is you get all these indicators included. Let's hop over onto TradingView. I've got one or two things set up here. This is another indicator that we've developed, which will also be rolling out. None of these are available as of yet, but they will all be rolled out when the stock trading investing program rolls out in the next few weeks. They will all come out with it, with associated videos. We've done a lot of videos around it, and of course the technical support pages and everything else that is part and parcel of that, which also takes time to put together, but we always do that as part of the launch program. This is on futures, but I've also got ETFs alongside on the next one. This is the market strength indicator. It's just a terrific way to see multiple markets, whether we are seeing sentiment flow universal across those markets or whether we are seeing divergence. I've got the 4 futures up here. I've got the YM, the Russell, I've got the ES, and I've got the Dow. And in addition to that, this pink line here, this is the VIX, the VX, which is the future. So I'm running futures here, just purely in futures, and we'll have the volume on those charts if we're looking at the charts as well. And what we're looking for here is sentiment, and whether the sentiment across the markets is universal. What's interesting, bear in mind, these are fast time frames. This is the 1 minute, this is the 3 minute, this is the 5 minute. Interesting to see at the moment, if I just pull that over a little bit, what we're seeing here, this is the Russell. And you can see the Russell is rising in this time frame for whatever reason, or was. It's just flicking up. But the YM here, this blue line, that is actually falling. So we have some divergence. Now, it may not be significant divergence, but nevertheless, it's nice to know that we are seeing that nice and early on this particular indicator. It's one that can be used in a multiple different ways. You can use it if you're familiar with the currency strength indicator. Very, very similar in the way that you can use it in looking at reversals. For example, up here on the 5 minute, we had this very overbought example with the VIX up here, the pink line, the VIX future, very overbought up at the top. And down at the bottom here, not quite into single figures, but getting there, and certainly well below the 70-30 split. So we're rolled down here in terms of the indices. So it's looking like a potentially oversold for the index futures. And indeed, down we come on the VIX and up we come on the index futures. Now we're oscillating around in congestion here. But it's, again, that is one example. The other way of using, so we're looking at extremes, in other words, we're looking at opportunities for taking, getting into positions early by looking at the overextension of a market, either to the upside or the downside, the overbought or the oversold region. Are we looking at oversold, where the market has a potential to reverse higher? Are we looking at overbought, where it's potentially looking to reverse lower? If we like reversal trading, I love reversal trading in the Forex markets. I do the same thing here. I like to get into situations early. I like to be in the trend early. The payoff is, and the cost is higher because I have to set a wider stop loss. So my risk is higher in trading reversals, but my payoff is greater because I get into the trend at the start, which is fine. If you're a trend trader, you're going to get in lower down the trend here. Once the trend has started, then you're going to be jumping on a moving train, and your risk is lower in terms of what you're putting on the table because your stop loss is going to be that much tighter. So the trend is underway. You as a trend trader are jumping on a moving train. Your stop loss is much tighter, but then your reward is much lower because you've lost the early part of the trend. You can't claim it back. Reversal trading is about patience and it's about higher risk because you have to put more money on the table, but your payoff is much greater. As I said in the webinar this morning, it's like going to the theatre or going to the opera. If you want the box seat, you've got to pay top dollar. If you want to sit in the stalls, that's fine, but you pay a lower price for that. And this is what it comes down to. If you want the best seat and the best view, then you pay top price. It's exactly the same. It's all about risk and reward. In investing or trading, it doesn't matter. If you put a higher risk on the table, then you should expect a higher reward, and a lower risk will pay off with a lower reward. So that's the market strength indicator. I've got it on futures here, but you can run it on ETFs. You can run it on stocks. You can see combinations of stocks. You can see whether you've got divergence, if you were pairs trading, for example. It's just a fabulous indicator which compresses everything into a very clear and logical and viewable way without having multiple charts. It's exactly the same in the way the CSI does that, the currency strength indicator. It compresses, it brings all this data together in a very visual and understandable and intuitive way of looking at things. This is it again. This is on, as I said, we've got it on the ETFs, and again, same time frames. I've got 1 minute, 3 minute, and 5 minute. And here I've got the diamonds, I've got the SPY, I've got the Russell, and I've got the QQQs. But as you can see, the principles are identical. We're looking at reversals, we're looking at sentiment, we're looking at strength of trend when we see the lines rising very strongly like this. This is telling us it's a very strong trend. Now, this strong trend may only be short-lived because we're on a 3-minute time frame. And the other aspect of using it in multiple time frames is very much to look at it across what is going on in our 1 minute, what is that translating into anything on our 3 minute and out to our 5 minute, because what you want to see is a trend getting underway in your fastest time frame, which is where it will always start. It is the pebble in the pond analogy, which I've recounted so many times, but it is true. The trend starts in your fastest time frame. If it's going to develop anything of significance, it will migrate through to your mid time frame, which in this case is 3 minutes, and ultimately out to your slowest time frame, which in this case is our 5 minute time frame, our 5 minute window. And as Anna always says, always look at the Russell. Whatever the Russell is doing, if the Russell is strong, then it's telling you that really there is strength in the equity market, because the Russell is high risk. It's much higher risk than the others in terms of the stocks that are involved with it. And therefore, if the Russell is showing good strength, then the chances are the other indices will also be showing a positive sentiment as well. So it's a key index to keep an eye on. And as you can see here, we've got a little bit of divergence taking shape here now. We've got the Russell starting to kick down a little bit. The SPY is flattening. The QQQs is maybe just moving sideways, and as is the diamond. It's certainly flattened off a little bit in the last few minutes at any rate. So it's always interesting to watch the Russell and see what that is doing in the context of the other three in that way. Very quickly, because I know time is ticking on. This is the SPY, and I've got the SPY here. We talked about the VRSI. This is the volume relative strength indicator on TradingView. And those are the two platforms that it'll be rolled out on to start with, but we will obviously migrate it across to TradeStation and also onto MT45 as quickly as we can. Just pop one open very quickly on the 10-minute there. You can see pretty much what has been going on. It's really not a lot. Anna said nothing. Probably a bit more than nothing, but not a great deal. And again, really just to reinforce the point I was making earlier about the VRSI, we look at the height of the bars, the volume, the pressure bars in context. You can see over here how tall they were. Different session, I appreciate, but in the current session here, we had a little bit of pressure here to start with, but really it's not translated into anything very much, even to the downside. We had a little bit of bearish here, but it very, very quickly reverted back to weak sentiment and back to the fulcrum line. And we're really just oscillating along that line with no great effort to move away from that. So it really confirms again, when we look at trends, we look at the angle of the trend, and really that should be demonstrated or mirrored, if you like, with the height of the pressure bars associated with any trend, and really just confirm that there's not a great deal going on there at the moment. That's on the SPY. And then finally, I've just got another stock here, just pulled AMD up here, same time frames right the way through. We actually go down to the weekly here just to show you that it does work across all these various time frames. And you see it works in precisely the same way. When we get a very strong trend developing, as we got here, this downtrend, we get another one here. Look how quickly we translate back into bearish territory here, very strong, and we've got the rising pressure bars here, really confirming all that. And then gradually we diminish back to the fulcrum here, and we move into sideways where there is no trend and we're in congestion. And then we start to build up. We see it falling away here, but then we get another injection here, very strong injection of pressure here to the upside. And then we're back down here again over on this side. So that's on the weekly chart, going back to, where are we, 2022, back out the some fair way away on that one. That's what I really wanted to cover for you, certainly on TradingView and on NinjaTrader, just looking at these new indicators in lots of different ways. I'll be covering them in more detail in other sessions. I'm going to pass back to Anna because I've probably taken far too long. So I'm going to switch off and hand back to her.
And just to have a look at the SPY, this is actually the 15-minute. David had the 10-minute, and I said earlier on, I said, well, you know, what would you be looking at in terms of a VPA signal? And the clearest one we can see here is obviously this hammer candle with the volume coming in, but really not moving very far. We're having a bit of volatility coming in. It's almost at the end of the session. That always happens on the ETFs. They have to be adjusted, don't they, David? They have to, depending on what the underlying index has been doing. You'll get a lot of buying, a lot of selling, and then you get the post market. But on the physical market today for SPY, what we also have to look at is what kind of range have we been in. In the pre-market, we had, let me just put the high up so we can have a look. We had a high of 452, never even got to 452. You can see here we have these sort of minor resistance points up here. Where did we get to? We got to 452.83. What did we get to here? We got 453.90. We almost got there, but essentially it's been in this narrow range, but it does have this strong support platform, which at the moment it is actually being tested as we move into to the end of the physical session, and we'll have to see what happens in post market. But because it's the end of the month. And we've got NFP coming tomorrow as well. And as I said, the holiday on Monday. It actually pays to have a look at the slower time frames, because they can give you an insight of, well, nothing, okay, hasn't moved very much today. But what is the overall narrative of the chart, as I said, on these slower time frames? And what's interesting is this is where we are at the moment, and we look at the volume on the weekly chart. This is the end of July, beginning of August. July ended up as quite a good month. It was fine. It ended up, it came off 436, and it topped out here at 458, which is where I think this price wants to try and get to. Hasn't managed it in August. August didn't start off fantastically well, but the 436 platform actually held. Every time this level holds, this particular indicator thickens the line. And last week we had a lot of volume coming in under here on a very, very compressed candle. When you get one of these compressed candles like this, depends where it is on the chart. It's coming after a downtrend. What that tells me is there is price support coming in. You can see that because there's an awful lot of volume. And in fact, in the following week, this is what we've had. But the volume so far, we've only got one more day, hasn't really followed through. So it's a warning signal. This, as I've said all along, this is going up on kind of slightly below average volume, but you would expect that because it's August. It's been okay. And this is what is reflected in this volume bar. Tomorrow is going to be key. We're going to see where this actually ends. Is it likely to end at 457? Who knows? We really just have to wait and see what happens with the NFP. And as I said, because it's the end of it's the week before the holiday. But these are the levels that we'll be looking at going into September. What you could do is also see, well, what happened last September? Because there is seasonality to certain months of the year, September, October being particularly noteworthy. Doesn't always happen, doesn't always reoccur, but it's something that the traders who take a very statistical approach, mechanical approach to the market will pay very close attention to. So that's the SPY. I'm going to be very quick. There's a couple of things I want to show you as well. Now, Nvidia, very much in the news, obviously. Stock that actually I've been writing about on Twitter and on my blog since the beginning of the year, because it was one of the stocks that was highlighted as having a lot of interest from actually retail traders. So maybe they knew something that the institutions didn't know. Today, this is the daily chart, another slither, as we can say. You can barely see the candle. It's a tiny little doji, but hardly any volume underneath it. But what I wanted to go to was the monthly chart, because what everybody wants to know now is, where is this going? And for that, we really need to have a look at the using NinjaTrader, because for some reason it doesn't appear on my trading view. And Nvidia had a stock split back in 2021 when the price was actually $600. So it is conceivable that that is what it's aiming for. When stocks are at a point on their journey, if you like, where it's a new high, and it's certainly a new high since the stock split, and you have something to reference it. Well, of course, everybody's going to look back and say, well, it was at that point there. This is the weekly chart. I've actually got a Camarilla here, and I'm looking at. And I've seen things like $1,000, $1,100, etc., etc. But let's be a little bit more conservative, as it were. We've got 505, we've got 525, and then we come up to the 600s, which are the levels pre-stock split. But what I wanted to show you was this here, this candle here with all this volume underneath it, and this big wick, which denotes weakness. Now, we could have a pullback on this because this is the weekly, and so far the weekly has not really is not supportive of the range of the candle that we see at the moment. So it is an anomaly. But this happened around the earnings, and the commentary that I've seen about the earnings, and it was in reaction to a video that I retweeted on my I can't say Twitter anymore, it's X. Essentially, there's been some insider manipulation with regard to the stock price, to the extent that money was borrowed on the expectation that the price would go much higher, because, as you all know, the earnings came absolutely blasted through and totally unexpected, and it was stock was bought, and then when the earnings came out and the stock rushed up higher, the stock was then sold and some huge profits was made. And we're talking about billions here, but it was all leveraged. It was all on borrowed money, and the borrowings were from other people involved in Nividia shares. So it was like a closed circle. It was like a little club within those associated with Nvidia. And it all sounds a little bit, I wouldn't say suspect. I'm not sure whether complaints are going to be made. This has been brought to traders and investors' attention by some very reputable people. This is not some wild conspiracy theory. Talk of it. Well, it's a bit sort of like Enron. The thing with Nvidia is that it has a unique product, and it has a chip that everybody wants. I mentioned it last week. Microsoft wants them. Apple wants them. It's to do with AI, and I think it's generative AI. So at the moment, it doesn't. I don't think it's any competitor. Once a competitor comes on board, then it's going to be a different story. And it also highlights the importance of, is when you are, this is probably more to do with investing, is when you are looking to invest in a stock, you really, really have to, you are buying the stock, but you're actually buying the business, and you're buying the people who run that business. Well, who are they? How do they run that business? And one of the comments that was made about this particular event, if you like, surrounding the stock price, around earnings and the subsequent profit taking, which is what that candle is that the company was being run like a hedge fund. So wasn't it not how you would traditionally run a tech company? So as we know how tech companies are run, we know the kind of people who run tech companies. I believe the people at the top of Nvidia they are techies, but it's kind of changed its look, as it were. So just be aware of that. So really get to know the company. As I think Buffett says, Munger says, all the big investors say, you really are buying the company and you are buying the people. Does that mean that Nvidia is, there's going to be a massive fall in Nvidia? I don't think so. We may see a correction. I think AI is the future, and it's certainly the future moving into 24, 25, and 26. And there'll be companies out there that we may not even know about at the moment. This is really very much for the future. So that's just what I wanted to say about Nvidia, and make a general point about really getting to know a company and how it's run, and who the personnel are, and what's going on with regards to anything to do with the insiders. And by the insiders, don't just mean the market makers, I actually mean the people, the hierarchy in the company. What I also wanted to highlight, we talk about volume, and we talk about this is August, it's a bit quiet and what have you. And you really, sometimes it's difficult to get a handle on, well, what do you mean by things being quiet? One of the ways you can judge whether the volume is what you would expect is to look at average volume, and you can find average volume on different platforms. You can either find it on Finviz, or I quite like bar chart. Bar chart, I actually subscribe to it. So just to give you an example, so for example, let's bring up Tesla, and this is today. And so far, the volume, this is the traded volume, it's done 98 million against an average volume of 110. So slightly less than average. And because you really get to know a stock, and if you trade it regularly, or you're constantly going in and out, you're buying more, this is the kind of information that you need to know. So once you've had a look at it over a period of time, and over maybe a year or so, you get to know the characteristics of that stock, and you'll know, well, okay, it's slightly below average because it's August, but actually it's not bad. That tells you there's interest. That tells you there's a lot going on. And if you're trading, that's what you want as well. You want a lot of volume, you want a lot of churn, and you want a little bit of volatility. This is where you can find it. Really acquaint yourself on the average volume. Now, average volume can sometimes it'll either be calculated over something like 3 months, 90 days, or it'll be calculated over 20 days. But you can do the calculation yourself. What are we looking at? Let's see what Nvidia has actually done today. Hasn't moved very much. It hasn't moved at all. A volume has been 43 against an average of 62. So again, a slight pullback. Has that been reflected in the price action? No, we've got a very we've got an anomaly on the chart. And if we look at something like the SPY, let's have a look. Yeah, so far we've got volume of 48 against average volume of 75. But with the SPY, we do have to wait till the close of business and almost wait until we go into the aftermarket to see what actually happens on the day. With TradingView, obviously, you've got here, you can have a look at it. It tells you what it is. You hold it over the candle. In fact, TradingView is brilliant at that. It doesn't give you the average figures on here, but it gives you the daily volume, so you can go through each candle and have a look and see what is average and what is not average. Let me just take all that off so we can have a look at the chart in more detail. There we are. Here we are. So that's the candle, which tiny little doji here. What have we done? Yeah, we've done 43 on bar chart. It was slightly more than that. It'll catch up. It's gone up to 51 now, but we know the average is higher. Oh, sorry, I'm looking at Nvidia. I do beg your. What am I talking? I do apologise. There we are. Let's have a look. Let's have a look at the daily. Let's have a look. Right, here we are. Where are we? There. We've done 6 today. We've done a 64, slightly below average. What did we do yesterday? We did almost the same, 69. What did we do here? We did 83. This is where it becomes quite interesting, because we can actually look at the height of the volume bar down there. So, okay, well, that was 83, and it moved the price that much, and it came here, and it's 69, but the price didn't go, didn't get that much, tiny little price movement. That's an anomaly. So it's using the volume statistics to help you with your VPA analysis. Right, that's all I'm going to say. Anything else, David, you've got to say? No. Or is that it? Right, I'll stop there. Apologies, I got my charts mixed up, but I just wanted to show you the general principle of looking at volume and average volume and where you can find it. We're going to stop here. I hope you enjoyed it. I hope you learned something possibly that you didn't know before. We will be back next week into September. Let's see what the volatility does. If you've got any questions on anything we said today, you can email me, anna@annacooling.com, or david@quantumtrading.com. So if you're in the States, enjoy the rest of the day or evening, and here in the UK, the rest of the evening as well. Enjoy the rest of the trading week. Have a great weekend, and if you're in the States, have a lovely Labor Day holiday, and we will see you next week. So thank you so much for coming along and joining us.